Good morning. As expected, the Indian market largely appeared unscathed a day after the Mumbai was rocked by fresh terrorist strikes, but the undertone is still jittery over a spate of local and global headwinds. For the moment, we expect a sluggish start at best. Asian markets are mixed and indecisive. US indices ended near the day's low. European equities too declined. As if the concerns on Eurozone debt crisis were not enough, the world now has to contend with back-to-back warnings on US debt situation. The dollar is down while the gold is near the record high. Watch out for the outcome of the European bank stress test later today. Back home, inflation is most probably in double digit and could rise further as the full effect of the last month's fuel price revision unfolds. June data came in tad lower than estimated, but April's reading was revised by 1%. So it's a given that another 25 basis point rate hike is coming on July 26th. Markets may have already priced that in though. Nevertheless, rising rates and high inflation will continue to haunt India income for some time to come. Meanwhile, shares of TCS will advance after the IT major came out with stunning Q1 results and the management exuded confidence for the company's business prospect going forward, notwithstanding headwinds confronting the key markets. Standard & Poor's has placed US credit ratings on watch a day after a similar action was taken by its competitor Moody's. S&P says there's 50% chance of a US downgrade. Negotiations on Thursday between the US President Barack Obama and congressional leaders ended without reaching a deal on the country's debt, according to the media reports. The US President is likely to address reporters on Friday. In his second day of congressional testimony, Federal Reserve Chairman Ben Bernanke repeated his statement that Fed stood ready to take more action should the economy weaken further. But Bernanke also said that inflation was higher now than it was a year later, so the Fed is not ready yet to take the action. FIIs were net buyers of Rs 2.11 billion in the cash segment on Thursday, according to the provisional NSE data. The domestic institutions were net buyers at Rs 5.17 billion on the same day. In the F&O segment, the foreign funds were net buyers of Rs 768.1 million. The foreign funds were net buyers of Rs 1.5 billion in the cash segment on Wednesday, according to the SEBI website. Mutual funds were net sellers at Rs 589 million on the same day. Sugar in the overseas market fell the most in 8 weeks on signs that production in Brazil, the world's biggest grower, will be higher than expected. Coffee and cocoa are retreated. Italian government bond yields edged higher, adding to the fears about a deepening Eurozone debt crisis. Separately, the Italian Senate passed the government's 4-year €40 billion austerity plan, sending the package to the parliament's lower chamber where it is expected to win approval on Friday. Spain's biggest saving bank, Bankia, gears up for an IPO next week in the face of sovereign debt worries, market turmoil and stress tests. Google's results have handily surpassed most Wall Street expectations, fueled by a significant increase in its demand for its online advertising. Moving on to our recommendations, the technical calls for the day are: we'd recommend traders to buy LIC Housing Finance above Rs 221 with a stop loss placed at Rs 217 and for the target price of Rs 230. We recommend traders to buy Ambuja Cement above Rs 127 with a stop loss placed at Rs 124 and for the target price of Rs 133. Our derivative strategy for the day are: Long Tech Mahindra July futures in the range of Rs 751 to Rs 753 for a target price of Rs 771 and a stop loss placed at Rs 743. Long Neyveli Lignite July futures in the range of Rs 100 to 101 for the target price of Rs 106 and a stop loss placed at Rs 98. Thank you. Wish you have a great day ahead.